Very good morning. Welcome to Chartbusters. Well, the next half hour odd, we'll get you a couple of managements. We'll also get you a call on the index. This Monday morning, we've started off on the back foot. Let's see where we go from here. I'm Nigel D'Souza, and joining me today is Ekta Batra. Hey, Ekta.
Hi, Nigel. Yes, and we don't have a holiday this week to save us either. But nonetheless, yes, it's a soft start to the markets for the week. We have the Bank Nifty, which is underperforming, down around 1.6%. But nonetheless, let's take a look at all of the top stories that we're tracking this morning. Indian equities pull back on a weaker set of global cues and a stronger dollar. Nifty slips below 17,600 as all sectors apart from FMCG trade with losses. All eyes now on the Jackson Hole Symposium this week.
Kotak Mahindra Bank slips after the FTSE rebalancing announcement, and it didn't get included as widely expected by the street. The next review will now take place in December 2022.
Shilpa Medicare completes phase 3 of human clinical studies for its biosimilar adalimumab. The drug is used to treat diseases like arthritis, psoriasis and ulcerative colitis and has seen over $19 billion of sales in global markets annually for 2021.
And the government removes anti-dumping duty on solar glass imports from China, increasing competition for Borosil Renewables. The stock is down 3.5%.
Adani Power surges on news of its impending acquisition of DB Power's thermal plant for a little over 7,000 crores. Greenlam trades higher, commencing commercial production operations at its laminate facility in Gujarat.
Well, let's get a call on the index. You know, we are hovering around that 17,600 odd mark. Are we bracing for a deeper correction, or do we believe that there's a bounce in store? Well, to solve that for us, we have Shilpa who joins in. Hi, Shilpa. Thanks so much for joining in. Shilpa, you know, we almost were talking about 18,000 odd. The bulls were feeling like they were in control. We almost kissed that level, but from there we have corrected a good 400 points. What's the view from here on? Would you be brave enough to take a long trade, or do you believe slippy slide? We're going back down maybe to around 17,300, 17,400 odd mark. Go ahead.
Nifty, after just testing, just touching the mark of 18,000, we are seeing that dip today. And as of intraday, we might find support around these zones of 17,550 to 17,600. Otherwise, a breach below this will straight away test towards 17,200. Likewise, Bank Nifty, we have a very strong support at 38,000 zones. So one should only buy when the fall is around that levels, then only a buy for targets of 39,000 and 39,300. Otherwise, Bank Nifty, one should sit out now. And Nifty, one can take a risk here by keeping a stop loss, a very tight stop loss of 17,550, and one could see a target of 17,650 to 17,700 zones for the day.
Okay, all right. So that's your target on the Nifty. But what exactly would your stock-specific calls be, Shilpa?
I have one buy and one sell. Sell would be Eicher Motors. It is trading at 3,355 now. One should sell this with a stop loss of 3,395 with for targets of 3,260 and 3,230 eventually. And one buy is Britannia. Britannia quoting at 3,715 now. It can see targets of 3,760 to 3,780 with a very tight stop loss of 3,685.
Okay, all right. Shilpa, thanks so much for stopping by and filling us in with that quick take on the index as well as a couple of trading strategies. For the time being, let's shift focus to our special segment where we get you a few ideas of profit from Money Control Pro. Nitin Sharma joins us to talk about a stock that he's tracking very closely. Nitin?
MapMy India's first quarter result was best in the company's history. Revenue jumped 14% sequentially to all-time high of 65 crores. EBITDA margin was also at highest ever of 46%. Segment-wise, consumer tech and enterprise revenue jumped 76% sequentially, while automotive and mobility tech revenue sequentially fell 15% in a seasonally weak quarter for this business. Recently acquired IoT business Geotropy added 8 crores in revenue and was EBITDA neutral in the quarter. Company's automotive and mobility tech business performance contingent upon the automobile sector, and with the rise of connected vehicles are positive for the company as personal and commercial adoption of the navigation technology is rising. Company generates 40% plus EBITDA margin and 30% plus PAT margin. Its EPS has grown at a CAGR of 37% in the last 3 years and estimated to grow by 26 to 30% in the next 2 to 3 years. MapMy India enjoys regulation-driven moat and sees limited competition in this space. At the current market price, stock is trading at FY24 PE of 51 times, which is higher than the peers. However, none of them have similar growth and margin trajectory. Long-term investors are recommended to buy this stock.
Well, definitely a pressured day today. We just about have 4 stocks which are holding up in the green within the Nifty. Britannia, in fact, is your top gainer on the Nifty. A lot of these FMCG stocks doing well. ITC, HUL, Tata Consumer Products. And on the downside, Apollo Hospitals. Watch out for that. It had a tough week last week. And today also it is your top loser on the Nifty, down around 3% at this point. It's already lost around 20% on a year-to-date basis. And it's losing a little bit of ground, and giving it company is Divi's Labs, which is down around 3% today and down over 20% on a year-to-date basis, similar to what Apollo Hospitals has done. But let's get talking to our first company on the show. Suprajet Engineering is the one that we're talking about. The company delivered what was a mixed bag of earnings for Q1, which was largely led by growth in their domestic business, but margins were under pressure. To understand what led to growth and what led to the margin pressure, we have with us Ajit Kumar Rai, the founder and chairman of Suprajet Engineering, joining in. Mr. Rai, hi, thank you very much for joining in. Well, you know, it's a given that your revenue growth was strong. It was up around 78% on a year-on-year basis in Q1, and congratulations on that. But I just wanted to touch upon the raw material costs because there is some amount of softening which has taken place in the commodity market. There are indications that maybe the chip shortage, the worst is probably behind us. How are things looking when it comes to raw materials, freight costs at this point in time, and do you see margin improvement?
Good morning, and thank you for having me on your channel. Yeah, you are right. In terms of the commodity prices, the peak pressure is off. Steel prices and other commodity prices have come down. And you're also correct in saying that the chip shortage issues have somewhat moderated. It's still a challenge, but I think it has improved significantly. Overall, even in terms of the cost, in terms of the shipment cost, port congestions, etc., things have eased. So to come to your issue of how it is affecting the margins, the price reductions in the commodities will have some, favorable tailwinds for us.
Okay.
But having said that, the main reason why the margins, optically lower in the last quarter is because of our new acquisition, the LDC division of Kongsberg,
Right.
which is a large acquisition that we have done. The first quarter, we had the consolidation of that number.
Yes.
It is undergoing, major, cleanup. So that is the reason. Otherwise, on a standalone basis, our margins have been pretty good.
All right, Mr. Rai, let me just get to that in just a bit. For the time being, we have some source-based information that's coming in there. Remember, par trading was barred even on exchanges a couple of days ago. And IX was the stock in focus because it would hit their volumes. Close to around 13 states were barred. On Friday, you got some bit of a relief that few of the states were allowed to restart. And now we understand out of the 13, 11 have resumed. So that will be a bit of a, at least things return back to normalcy. We can start tracking the volumes right now. So 11 out of the 13, they can resume. And 2 smaller states, I think J&K and another one, both of them, Mizoram, both of them have not yet been given permission, but they account for a lower proportion of the volume. So a bit of relief coming in for IX. Just keep an eye out on that. Well, Mr. Rai, apologies for that. Getting back to the point that you were making on the margins front. LDC, that was the new acquisition in there. And for the past quarter, the margins were negative 5%. Now, I think the goal was to start improving from here on. So on LDC itself, from quarter 2, will we see a margin improvement from negative 5%? Does it get closer to around the break-even point? And also for the second half of this year, given that you'll be ironing out various issues, what should the margin number look like? Only on this acquisition, that's LDC. Go ahead.
Thank you. Regarding LDC, we had come out with our recent update where we have clearly stated that this year is the year of cleanup, where we will be streamlining operations, cleaning up the books of accounts, etc., etc. In that spirit of cleaning up and bringing their books in line with how conservatively we keep our books. So it will take about a year for us to do that. So first couple of quarters, as we have said in that update, we will have negative EBITDA, whereas the last 2 quarters of this year, we should be back to black. And we have also said that given 24 months time, that means end of the second year's quarter, that means 23-24 Q4, we should be close to back to our original estimated EBITDA margins of about 10%. That is what we have said recently in our updates.
Okay, all right. So you're expecting to revert back to 10% margins probably by FY23, FY24. I'm assuming your debt figures also rose because of this acquisition. It was over 535 odd crores. What is the plan in terms of debt reduction? What would be a sustainable figure for you?
Our debt is, on a debt to EBITDA basis, our long-term debt is only about 0.3:1 on a debt equity level. So it is very modest actually. We had hardly had any long-term debt as of beginning of this year. Only because of this acquisition, there is a long-term debt has come on the books. So the debt levels are pretty comfortable. I think of the 500 odd, nearly 50% is only working capital debt. So we are hardly leveraged actually. In terms of long-term, it's about 0.25 or 0.3:1 debt to equity. So it's not a matter of concern at all.
All right, Mr. Raina, to be fair to you all have done a couple of acquisitions and you all have turned them around quite well as well. So on LDC, I'll be tracking that 10% number. But the other one that you all did in the past few years was Phoenix Lamps. And out there, the margins have come down to around 5.5%. I'm aware that in Europe, there's been some bit of issues. You have some exposure out there as well. So my question to you on Phoenix Lamps particularly is, will there be a recovery from year on from these margins of around 5.5%? Point number one. And also, let's clear the air out here. You had acquired this asset, you managed to turn it around. There was some speculation that maybe you're looking to sell it. Any thought on those bases? If you could clarify both these 2 points. Go ahead.
First of all, let me categorically state that there's absolutely no plans of selling PLD. It is very much part of our group, and we are quite excited as to what are the opportunities that we have. The margins have been under pressure, you are right, particularly because of the European operations, which has undergone quite a bit of turbulence, thanks to, recently now, as Ukraine war, which is adding to further to reduction in certain amount of volumes and the pricing pressures. But having said that, I think with some of the activities that we are now currently undertaking, given a couple of quarters, we certainly expect the margins to improve. So it's certainly not for sale.
So to what level? From 5.5%, it improves by what? 200, 300 basis points. But for the second half of the year, Q2 will still be difficult, so we take that. But for second half, I mean, what kind of a number could it look like?
I think the number that you mentioned is possible. It all depends upon depending upon how the commodity prices behave in the second half of the year. Particularly, the krypton gas and some of these, precious gases are very, very expensive. It's gone up by something like 30 times. So these are the ones which is not easy to pass on to customers. But having said that, some margin improvements is what we are expecting.
Give a number, 7.5 to 8%. Should we take that?
It's difficult to estimate. I'm certainly expecting an improvement.
Got it.
But what it is, it again depends upon how the commodity prices behave.
Got it.
All right. Just leave us quickly with some outlook on India at least, because that's 60% of your business at this point. It's done well for you. What is the run rate that we can expect in the coming quarters? What does the order book look like?
The first quarter, automotive industry in India has grown by about 30-35%, whereas we have grown by almost 60%. And having said that, July, I think the automotive growth has been a single digit, but we have had a solid double-digit growth. So we continue to expect to outperform the Indian automotive, overall automotive market comfortably by 5, 10, 15%. So that's our outlook in terms of the growth for the domestic, standalone business.
And what about the exports? And do you think that at some point, maybe the domestic would become a greater share for you as compared to the exports?
No, I mean, currently with the LDC acquisition, the scenario has changed. We used to be, as you rightly said, 60-40 India business and overseas. Now with the LDC, it is the other way. Now it is 55% global business and only 45% will be India business.
Okay.
And we expect strong traction in our global business going forward.
Okay. All right. Let's talk about the Sena business. That's a non-auto cables business. Out there as well, margins have come down to around 10.5%. I remember you used to do close to 20%. So what is the outlook on that business front? What should the steady state be on that one? Point number one. And point number two, new products is what you've been talking about to the sell side as well. And they're quite enthused out there. So new products, how much can it contribute to say FY23 revenues or FY24 numbers? A couple of numbers, sir, if you could share with us.
Okay. In terms of the Sena, I think just to clarify, our our normal EBITDA margins were about 13%, 12, 13, 14% in that range. In the first quarter, it has been about 11%.
Yes.
But it's only an aberration. There has been certain one-offs. So we expect that margins to go to what it was in the past, 12, 13, 14%. We expect that to be in that range.
Okay.
So that would be back to that level within a quarter or two. So that is as far as Sena is concerned. In terms of new products, I think our Suprajet Technology Center, which has been set up a couple of years ago, is doing a wonderful job. And recently, we are now in the process of commercializing a digital speedometer plant in Bangalore. And that will add to as a significant new product for Suprajet Group going forward.
Okay.
And Suprajet Technology Center's products are being launched with multiple, both EV as well as non-EV customers.
Got it.
And that would be, something that would add to our values and growth for the coming years.
Okay, all right. Very quickly, Mr. Rai, before we let you go, consolidated number for the company. We discussed all the different verticals. What should the revenue number look like, given that you have LDC coming in as well? And the consolidated margins should look like what? We've got the breakup of piece by piece, but if you could give the straight two numbers, revenue number as well as a broad margin range. Very quickly, sir.
On margin, it is difficult to say because LDC is the one that would be a big challenge for us in this current year. So on a steady state, we have said that our margins will be on a longer term basis between 13 to 16%. I think that's where it will be. May not be this year because of LDC.
Okay.
In terms of the total number, if you just look at it, I think we did about 1,800 crores last year, and LDC is about another 800 crore business. So add maths up. If you add the maths, it's about 2,700 crores. That would be the run rate for the current.
Okay, all right, Mr. Rai, we're going to let you go on that note. Thanks very much for joining in and speaking with us.
Thank
so that's
you
Suprajet Engineering. The stock a bit sluggish today. In fact, has lost quite a bit on a year-to-date basis as well. And you need to take a short break. On the other side, stay tuned. A lot more stocks in focus. We'll be covering that once we're back.
Focus on the latest round of rebalancing in terms of the FTSE. Sonia joins us to run us through the list of the stocks that have been added and some of them which have not made it. Sonia?
Well, thanks a lot for that. There are very interesting additions and deletions. So I'm going to start with the additions first. Bharti Airtel partly paid up shares have been added as part of the FTSE rebalancing. And in the migration to large cap stocks, there are names like TVS Motor, Varun Beverages, Tata Elxsi, HAL and 197 Communication. Of course, stocks like Tata Elxsi and TVS Motor have had a very good run up until now. In the migration to mid-cap stocks, there's also an interesting list. A lot of big gainers, the likes of Gujarat Fluoro, Indian Hotels, Schaeffler India, CG Power as well as Linde India. And in the migration to mid-caps from large caps, so stocks that have perhaps been downgraded if you want to call it that, Aurobindo Pharma, Gujarat Gas, HPCL, Lupin, NMDC, Star Health, SAIL and Vodafone Idea. And also there are 24 stocks that have been added to the small cap list. So very interesting moves there. But I think stocks like, the big ones are names like Varun Beverages, Tata Elxsi, TVS Motors that have been migrated to the large cap category. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's on the entire FTSE rebalance. Remember, Kotak didn't make it this time, so you can see that pressure on Kotak Mahindra Bank within the Nifty space. That stock is your top loser or one of the top losers, third top loser on the Nifty, down around over 2.5%. But it's definitely Divi's and Apollo which are really neck to neck in terms of being taking the rank for being the top loser on the Nifty this morning. So Apollo Hospitals down around 3% Divi's also losing steam, down around 3.5%. But from the broader markets, there's a lot more buzzing. So for example, Tata Chemicals, which had a really strong run post its numbers, is now seeing some amount of profits being taken off the table. So that stock is down around 3.5%. Oberoi Realty from the realty space, which has gained around 7 to 8% on a year-to-date basis, is losing a bit of ground. So that stock too, down around 3.5%. Metropolis is the other one. It's extending its losses. Remember that stock has corrected around 60% year-to-date and is down another 3% today. But we have Nimesh with us to tell us more about Kotak. Nimesh.
Hi, so as expected, the stock is under pressure today because in the FTSE semi-annual review, Kotak was not added to the FTSE World Index. Now, there was a lot of anticipation that the stock will be added to the FTSE. Given the fact that the June shareholding came after the cutoff date, FTSE is not considered for this particular review, and hence it didn't get added to the world index. Now the next review is only in December. So because of that, last week, if you see, except for Friday, the stock has relatively outperformed the bank index and the large banking peers. So there was a bit of anticipation that the stock may get added, and with full investability, the buying would have been more than $700 million. Now, since this has not happened, today the stock is under pressure. As I said, the next review is only in December, so only next time when the FTSE review comes up, the stock can get added to the FTSE World Index. As things stand, FTSE is not considered because the shareholding came late, so hence that stock is under pressure today.
Okay, all right, Nimesh, thanks a lot for that. Well, by the way, before we wind down, the markets have moved to the low point of the day. My sense is that this is a very, very crucial level. 17,550 to around 17,600 odd. Either we get a bounce from here, or otherwise there could be a bit of slippy slide. So very, very crucial juncture is where we are at. And at the start of the show, we told you about IEX. Out of the 13 states, 11 states have been allowed to continue trading now on the power exchanges. And IEX recovered a little bit from the low point of the day. We'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.